On 1st June 2023, the US Congress made a decision to suspend the debt ceiling, which is the maximum amount of money the government can borrow until January 15, 2023. This move was necessary because the government has been spending more money than it has been earning, and there are several reasons for this. Some of the factors include the ongoing wars in Iraq and Afghanistan, the financial support provided to people affected by the pandemic through unemployment benefits, and the various tax cuts implemented by President Trump. By suspending the debt ceiling, the government can continue borrowing money and paying its bills for now, thereby avoiding a situation where it cannot meet its financial obligations. However, it's important to understand that this is a temporary solution. In the long run, this decision has contributed to the already growing debt of the country. In fact, the US government plans to add about $1.4 trillion to its debt in this year alone. This leads us to two important questions. First, who will buy the bonds that the government issues to fund its debt? In the past, these bonds were purchased by US private banks, the Federal Reserve, Japan, and China. However, the situation has changed recently. China, due to the rising geopolitical tensions with the US, has been diversifying its investment portfolio away from the US dollar. Japan, on the other hand, is currently facing inflation after a period of about 41 years, and its interest rates are expected to rise. As a result, they will likely prioritize using their capital to address their own domestic situation. Therefore, most of the pressure of buying these bonds falls on the Federal Reserve and the private banks within the country. This has raised concerns about the possibility of inflation since the money will mainly circulate within the United States. The second question is related to where the borrowed money will be parked. In this case, the money will be used to stimulate the equity markets once again, particularly the stock market. After a prolonged period of decline, this injection of money is expected to boost stock prices and potentially create a bullish rally in the markets. This situation is similar to what was experienced after the global financial crisis of 2008 and 9, where the stock market recovered and showed significant growth. So in simpler terms, the government decided to allow itself to borrow more money temporarily to pay its bills. However, this means that the country's debt is getting bigger and could lead to problems in the future. The government will borrow money by selling bonds, but fewer countries are going to buy these bonds as of now. Therefore, most of the bonds will be bought by the US government itself and the private banks within the country. This could potentially cause prices to go up and contribute to inflation further. The borrowed money will be used to boost the stock market, which might present an opportunity to make money, but it has its own risks. Ultimately, you have a choice to either be cautious and avoid getting involved in this situation or try to make informed investment decisions to potentially benefit from it. Having said that, do your own research before investing, and if you like the content, do hit that subscribe button to stay tuned with our upcoming videos.